What's going on, guys? Resilient Trading Group here, coming at you with another video. In today's video we're going to be looking at how to identify different trends and also trade them. So the pair we're going to be analysing today is the New Zealand dollar versus the Swiss franc, and this is all about identifying different trends. So we're starting out on a larger time frame, in the 4-hour time frame, and just going to be going over the fundamental technical analysis that we would do. So what we want to do is just identify if there's a current trend, i.e. is there a downtrend? No, the downtrend's been broken, so we need to be looking for the uptrend. Now what I can see is the uptrend is now forming. The uptrend is somewhere around here, from this bottom wick here all the way to there. That is the current uptrend. It's not a downtrend, this is currently an uptrend on the 4-hour time frame. So we can now identify that. Can we see any boxes of consolidation where it's been trading in? I can see one bit of consolidation over here, like so. With consolidation I like to use the rectangle tool so I can fully draw it out. Of course, when trading consolidation, you buy on the bottom and sell on the top. This is your resistance, that is your support. Consolidation is usually happening when markets are exhausted and they're just floating about at a current level, which was the 0.58 level where we're currently trading. So now we've got the consolidation, we know what trend it is. Can we spot a wedge? Now if we look at this current pair, what I do notice is there a line of resistance somewhere in this region. It's bang on about there. Now this is a wedge. I done a previous video on how to trade in a wedge. Of course, this is the higher low, higher high, higher low, higher high, higher low, because it is lower than that one. Higher high because it's higher than the previous high. Higher low, higher high. So we should actually be looking for a pullback, maybe to around this support line here. Maybe you like to see it pull back off this support line and then go for a long, so that could be a potential opportunity for us there. Another trend technical is also your support and resistance. I can see a very key line around this 57.05 level. Now our resistance would be on 57.70, so about 70 pips. Now with all of these, you want to be trading in between them. So with your consolidation, you want to trade in between the consolidation, not waiting for the breakout. Trade in between it, make it nice and easy. You buy on support, sell on resistance. That's what it's been doing. It's there, you can back test it, it works. You can then break it on the actual break of consolidation. So when you want to trade a break of consolidation, you need to see a clear breakthrough, which this candle here is good enough for you to sell it here. Your stop loss would be somewhere above these resistance there, and you'd sell it all the way down to the support or the resistance. With the wedge, you would buy it on the support line, which is this line here, and you would sell it on this line here. With wedges, and if it's in an uptrend, I like to always buy and not short, because it's in an uptrend. You know, price is always going to be looking to move up, so don't go against the trend, trade with the trend. And with the support and resistance, you want to be trading in between the support and resistance. Again, if it's an uptrend, I like to buy in the support and not sell on the resistance, just because it minimizes the risk on your part because of the overall trend. So they are just some of the key trend technicals that you can actually be using in the bigger time frames, the 4-hour. But if we break it down into the 15-minute time frame, what we can now see is that where I said that line of support was, is actually a box of consolidation. So for the last pretty much day, it's been trading in consolidation, and I would only have known that if I dropped it down into the smaller time frames. So you need to be doing that, guys. Drop it down into smaller time frames. Look at what the overall day trend is. You know, really pick apart the currency. Now, you would know that you would, as I said, you would always buy it on the support. It's an uptrend, buy it on the support, and as you can see, it just shot up, and now it's created a new higher high. But if you look back here, on a smaller time frame, again, perfect trend line. As you can see, how you trade this is, you would just draw the trend, you'd be patient, and you would wait for a break of the trend, because you know it's an uptrend, it's soon got to break it. It rejected off support, broke the trend. Your entry would, I would say, been here. Nice doji and then 3 green candles. I would have bought it there. My stop loss spot back below the support line. So this is how I would have traded it. Back below the support line and to the current resistance, which would have been there. And then what you would end up doing is you would trade it all the way to the top of the actual wedge, and that would give you a risk reward of 1 to 2. That's how you would trade that. Wait for a break and then go long. Again, in these smaller time frames, all you're looking for are these little movements here. Wait for these small little breaks. These breaks will be your best friend. Downtrend right there. Wait for the break. You would have your entry there. You'd long it to the top of there. These are short scalps, but guys, this is how trading is so simple and easy. You don't need to overcomplicate it. Always break it down into smaller time frames. That is something nobody ever teaches you. When you break it down into these smaller time frames, honestly, trading becomes so much more easier because you can start to understand how markets move. As you can see here, it's broke the support, shot down. Very simple, very easy, and your take profit would be on the support line. So this is literally all you're doing. You'd wait for a break, you would want a nice candle, your entry would be on that candle there, straight down to the support. You're minimizing risk because your resistance line just be above all the current candles. You know, you could take out that wick if you wanted. That's just a clear outlier over there. And if we keep going back in smaller time frames, all it is support, resistance, trend lines, and consolidation, guys. That is all it is. It's so easy, it's so basic. Please implement it. Tell me what you guys think, and I hope you enjoyed the video, and I hope it is very helpful for you guys. I'll see you in the next one.